Hello, everybody. My name is Luke Robinson, and I am a business advisor here at Collective. And essentially, it's my job to speak to prospective, collective members and go through their situation, go through their business, and see and determine if Collective would be a good fit for them. And Collective, you can kind of think of us as kind of like an all-in-one solution for a small business owner. What we would do is pretty much the whole shebang. We would form your business if need be, set up an LLC for you, make an S corp election for you, and then run your payroll, your bookkeeping on an ongoing basis, provide tax support year round, and then at the end of the year we would take care of your business tax return, of your S corp tax return. But today we have a fun little session called Tax Tuesday. And essentially what Tax Tuesday is, it's an AMA. It's an Ask Me Anything, surrounding taxes, surrounding best practices to run your business, discussions about the business finances, or just ways you should proceed in certain situations and other things like that. So anything you want to ask me, please bring it to me, and I'll either answer it, of course, to the best of my ability, or I'll tell you to maybe go and get some more specialized support for it. But also, before I go any further, I kind of just need to get the legal stuff out of the way. And technically, this is just an informational session only. Do not consider this, official tax advice, legal advice, or anything like that. I am not an attorney. I'm an enrolled agent with the IRS. But, I haven't seen your tax situation. I haven't seen what's going on with your situation. And the things that I say, could not apply to you. They could be wrong. The tax code is very complicated. So before you take any official action at all, speak to a CPA, speak to a tax professional, and don't take this as sort of official tax advice. It's not. It's just information. But I believe that we already have some questions that have rolled in. And let's go ahead and get started. The first one is, what is an S Corp? Well, that's a good first question, since Collective is an S Corp company. A lot of people, when they hear the word S Corp, they sometimes have, I guess, a misrepresentation about what, exactly what it is. An S Corp is not a business entity. It is not necessarily, it's not a corporation. It is a tax election. It is a way to ask the government to tax your business entity. So, for example, you can either be an LLC, a partnership, which is just multiple people on an LLC typically, or a corporation before you elect the S Corp tax status. So, and the entire reason why you want to do that, especially if you're an LLC, before you become an S Corp, a huge chunk of your earnings, of your net income, is subject to the self-employment tax. Self-employment tax, it's a flat tax rate of 15.3%. That's what it is. Before you become an S Corp, let's assume that someone makes $150,000 net income through their LLC. Before you become an S Corp, how you'd come up with your self-employment tax is you take $150,000 and you'd multiply it by 15.3%. All of your net income is subject to it in that situation. But what happens with an S Corp election? And that's paperwork filed with the IRS. It's done with the feds. And what happens is essentially you become employed by your own LLC. You literally become a W-2 employee of your own operation. So you're still the owner, of course. You're still listed as the owner, on the company formation documents. In this case, if you're an LLC, your operating agreement. But you also, for tax purposes, you become an employee as well. And since you're an employee, your business will pay you a salary. It'll pay you a W-2 wage, just like you'd receive if you work for someone else as a W-2 employee. But the cool thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So for example, speaking earlier about my example of someone that makes, $150,000. Let's assume that someone's salary with that kind of net income, let's assume that someone's salary is $60,000. That's kind of a spitball. I don't know exactly what your salary would be in a situation like that, but let's just assume it's around that $60,000 mark. That first 60,000 is still subject to the self-employment tax. You still pay it. But the other 90,000, or just the rest of your money, outside of your salary, those are considered distributions on your behalf. Conceptually speaking, you can kind of think of those, think of that chunk of money as dividends almost. Some people use the term dividends. Long story short, that $90,000 is no longer subject to the self-employment tax at all. So, just how you come up with your tax savings in a situation like that is you take 90,000 and you'd multiply it by 15.3%. And that comes out to $13,770 that you would save in the self-employment tax, an example like that. So, it just at a certain level, an S corp election just financially makes sense for a small business owner. Can you make an S corp election on a partnership? Yes, you can. A partnership is simply just, two or more people on an LLC, involved in an ownership on the formation documents on an LLC. So you certainly can make an S corp election on a partnership. And, just kind of depending on how, how much work the partner does in the business or whatever, that partner would also be paid a salary just like you would. And whatever distributions each partner takes would not be subject to the self-employment tax anymore. So you certainly can make an S corp election on a partnership. All righty. What are some of the reasons why you wouldn't want to be an S corp? That's a really good question. So for one, you wouldn't want to be an S corp if you ever wanted to go public. If you ever wanted to, issue stock or not stock, but if you ever wanted to, let me put it to you this way. If you ever wanted to have over 100 owners into your business. So for things like fundraising and, wanting, 1,000 people or something to have like an ownership in your business, an S corp election isn't the best thing because you can only have up to 100 owners into your business when you have an S corp election. So, that's one thing. And another thing is let's say that you like your main business income comes from passive income. Like let's say that it comes from, rental properties, rental income, or proceeds from stocks, bonds, things like that. That sort of money, those sorts of earnings are not subject to the self-employment tax at all. Passive income typically isn't subject to the self-employment tax. The entire reason why you want to make an S corp election is to save on the self-employment tax. So typically there's no reason to put like a rental property or something under an S corp because you're not paying any self-employment tax anyway. So, why would you sort of complicate your tax situation and put a bigger burden on yourself when you're not going to get any benefit from it? So that's something to keep in mind. Okay, let's see if more questions pop in. What's different between an LLC and an LLC with an S corp election? Well, there are several things that are different. For one, is you pay less in the self-employment tax with an S corp election. That's kind of the first obvious thing with an S corp. But also, there are additional administrative requirements with an S corp as opposed to just an LLC. The first one is you actually have to make the S corp election. So it's an extra form that you send in with the IRS, and it's an extra form. It's a form that you don't have to do obviously when you're just an LLC. And real quick, it looks like Chris, hello, I haven't been contacted yet to sign up. I've tried twice now. Well, I'm sorry about that, Chris. If you don't mind, send us a direct message here on Instagram with your email and other details, and I'll look into it a little bit further after this call or after this session. But I apologize about that. I'm not sure what happened there. But anyway, so one thing is you have to file extra paperwork to even become an S corp. Another thing is you have to run payroll when you have an S corp election. There's a payroll requirement. You have to pay yourself a reasonable salary. You have to pay a portion of your earnings to yourself in salary. That's something that you don't got to do when you're just an LLC or you're a sole proprietorship. How you pay yourself is you just transfer money from your business bank account to your personal bank account. That's how you pay yourself. But when you have an S corp election, you typically need a payroll processor that will run your salary. So that's just an extra complication and something you got to do. Something else you got to do is an S corp is required to track a balance sheet too. You don't have to track a balance sheet when you're an LLC or a sole proprietorship, but with an S corp you got to. So it kind of it increases the complexity of your accounting a little bit. So that's one thing. And then another thing is with your salary. Let me go back a little bit, talk about the salary. It has to be reasonable. And what does that mean? Well, the IRS doesn't give a whole lot of guidance on what a reasonable salary even means. So when you really what it is, it's a facts and circumstance test. So there's a few things to take into consideration when you're trying to come up with a salary analysis. One is, how many hours a week do I work in my business? How much experience do I have? What are other similar professionals? What are they making in W-2 salary? What area of the country do you live in? There's several sort of characteristics or things that you should keep in mind when you're trying to come up with a salary analysis. But really, the best thing you could do is rely on the advice of a tax professional when it comes to that kind of stuff. And that's a service that we provide here at Collective as well, is we'll actually do a salary analysis and we'll give you kind of a range on what we feel is appropriate for you to pay yourself. Because the problem is, if you pay yourself too low, well, let me back up. Some people will ask me, okay, if I'm only subject to the self-employment tax on my salary, then why not just pay myself a low amount? Why not just pay myself $1 in W-2 salary or, $10,000, something like that, something low? And my response is that if you do that, you're increasing your risk for audit. The IRS, like I just said, they say that it has to be reasonable. So if someone's making $200,000 in total from their business and they're only paying themselves $20,000 in salary, that's probably not very reasonable. The IRS might have a problem with that. So how they fight against that is they say it has to be a reasonable amount. And generally, kind of the good rule of thumb is very generally, this isn't set in stone, but typically between 30 and 50% of your net income is usually what people pay themselves in salary. Sometimes a little bit higher. Sometimes people will pay themselves up to 60% and sometimes even higher. Just kind of depends on the situation. But kind of a good rule of thumb is between 30 and 50% of the net income. What happens with the rest of the money? Does it have to sit into the business bank account? No, it doesn't. So you can think of your earnings in S corp in two buckets. In one bucket, you have your W-2 salary, and that will flow from your business bank account into your personal bank account, just like a check would, through our payroll processor. So, weekly, monthly, biweekly, quarterly, whatever's most convenient for you, we can structure it that way, or it can be structured that way. Your distributions are your second bucket of earnings. And how you take a distribution is you just manually transfer money from your business bank account to your personal bank account. It's very similar to taking an owner's draw. It's very similar to probably what you're doing now if you're just an LLC. And you can do that, any time of the year for any reason. Like, you have access to your money at all times. Now, there are some people, like, just for ease, that will wait until the end of the year and transfer themselves like just a whole bunch of money. But you don't have to do that. Like, there's no additional taxes that you're saving if you do that. Like, there's not really a strategy in terms of the distributions. So, generally what I advise my clients is just, as soon as you have money, and if you don't need, to keep it in the business bank account for expenses or things like that, then just give yourself a distribution. There's nothing wrong with that. Is it too late to elect to be an S corp now that we're in tax season? No, it is not too late. So the IRS gives a general sort of deadline to elect the S corp 75 days after the beginning of the tax year. So in other words, March 15th. Usually you would need to do it by March 15th. You would need to elect the S corp tax status by March 15th. Now, something else that's important, though, is you can only become an S corp if you have an LLC set up. So if you're, thinking about becoming an S corp this year, it's important to get an LLC set up as soon as possible, because you can only become an S corp once your LLC starts. So let's say that you're currently running yourself as a sole proprietorship this year, meaning that in the month of January you didn't have an LLC set up. You can't be an S corp for the month of January anymore. That's past. It's done. You're a sole proprietorship for the month of January, and you can't rope that income under an S corp. Now, let's say that you get the LLC set up in February. Like, even if let's say that if you get the LLC set up on February 28th, something like that, then you can still be considered all the money that you've made since February 1st onward can be roped under the S corp books in the business of the S corp. So that's like kind of a fun little trick there, but that's why it's important to get an LLC up and running as soon as possible. Okay. All right. I think we've got a couple more questions. Do you need more than one employee yourself to be an S corp? No, you don't. It has absolutely nothing to do with that. Now, you can hire employees as an S corp, so that's totally fine. But there is no requirement for you to have additional employers or contractors. You can be a single member LLC without any employees at all, and you can make an S corp election on that LLC. That's a really good question, Jamie. But the answer to it is no. Is you do not have to have additional employees. Sorry, I had to crack my neck there. That was I'm sorry, apologies. That was kind of a little bit of a compulsion. But no, you don't have to have employees to be an S corp. Can I establish a company for website services in the USA with no resident or citizens as shareholders? Let me think about that, see if I understand that. With no residents or citizens as shareholders. Sure. Yeah, you can establish a company in the USA. That's not a problem. Oh, with no U.S. resident or citizens as shareholders. No, you can't do that with an S corp. The people that are a part of the S corp have to be they have to be U.S. citizens, or they have to pass the substantial presence test, and that's a little bit complicated, to be honest with you, a little bit complicated for this conversation. But typically, someone has to be a U.S. citizen generally. How often do you go live about S corps? Well, we do this Tax Tuesday every Tuesday, so weekly. But there's several things. There's other things that we do that Collective does as well, like webinars, like meetup events, things like that. So there's always something going on, and I would encourage you to like check out our website. Just check out our social media pages, and there's some really cool information and meetups and stuff on there. Okay. Does Collective provide services to set up payroll for my S corp? Yes, we do. We'll actually run the payroll for you, um, and we'll provide that. Now, keep in mind that Collective right now only works with LLCs with S corp elections. If you have a corporation that has made an S corp election, unfortunately, excuse me, unfortunately, right now that's out of scope. Now, I think eventually we will open up to corporations that have an S corp election, but right now we're only working with LLCs. So just keep that in mind. But please, if you'd like to have a conversation, then go to our website, or go to like send us a message here on Instagram, and we'd like to set up a call with you to see if Collective would be a good fit for your business. What are some things to keep in mind for this tax season? Well, there's a lot of things to keep in mind. Uh, I would say, for one, I need to convert my current LLC into an S corp. Do you all do that? Yes, we do. That's what we're known for. So please, and also too, we would do much more than that. We, run your payroll, run your bookkeeping, file the S corp tax return at the end of the year, provide tax support. So we do the whole shebang. And like I just said, please set up a call with us, and you can speak to a business advisor like me, and we can go through and determine whether or not an S corp is even in your best interest. Okay. Why do you suggest LLCs over corporations when making an S corp election? That's a really good question. And really, it just kind of depends on what you need. Because really, typically the only reason why you'd want to become a corporation, or, set up a C corp and make an S corp election, is if you ever wanted to go public. If you ever wanted to, like, list stock on a stock exchange, or, like I said, if you wanted more flexibility when it came to fundraising, or having more than 100 owners in your business, things like that. So, but that doesn't apply to a vast majority of small business owners. And keep in mind too that when you have a corporation, you have additional administrative requirements that are not required of you when you have an LLC. So, for example, with a corporation, you have to have a board of directors. You have to have a board of directors, and you have to have you have to have you have to keep board meeting minutes as well. Like, you have to have uh, annual board meetings. You have to keep a corporate ledger. There are just more administrative requirements that you have as a C corp that you don't have as an LLC. So if you're not if you're not getting any benefit from it, and if you never think that you're going to go public or have more than 100 owners in your business, then what's the point of forming a corporation and having additional administrative requirements when it gives you no benefit? So a vast majority of people just need to have an LLC as opposed to a corporation. Now, some people like to set up a corp because of you get to have an Inc. at the end of your name and things like that. They think it makes you look more professional. But in my experience, clients don't really care about that. Clients care about whether or not you can provide them good service and what you're going to do for them, what your business can do for them. Okay. All right. Let's see if there are any more questions here. Which state tax is applied when selling event tickets, advertising pages, and program books if you process the invoice in Florida remotely, but the event is in Virginia and the customers are from various states? That is a complicated question, and unfortunately, I'm not going to be able to answer it. So, unfortunately, the states have all kind of different tax rules. It just kind of depends. So, if you're in this kind of business, I would very much recommend getting like a tax attorney or a CPA that specializes in kind of like those multi-state activities, because I'm just unfortunately not going to be able to answer it. It's extremely complicated. What is a holding company? Well, a holding company, so typically, and in my experience, holding companies are used to kind of tie together businesses that are unlike one another. So, for example, let's say that you have a consultancy LLC, a massage therapy LLC, a candle business. Let's say that you have 3 different businesses. What a holding company would do is you would create an LLC on top of all these 3 LLCs, and the holding company would essentially own the LLCs beneath it, and it would act as kind of like a management company. So what people do is, like, typically they'll route money from the 3 bottom LLCs into the top holding company LLCs. Like, they'll deposit money into the bank account. And essentially what it does is it kind of, decreases the liability that you have, to where, if people sue the bottom 3 LLCs, generally there's no assets to kind of go after, because it's all being routed to the holding company. But those are extremely complicated, and I would, before you do anything like that, I would, consult with a tax attorney or consult with a CPA. And unfortunately, that is all the time that I have left today. I've actually got to go speak to a prospective collective member, but I enjoyed it very much, like I do every week. And we hope that you join us next week for another Tax Tuesday.